Okay, all. Thank you for joining us. We are going to make a start now, and people can jump on as they join us. So hopefully you can all see and hear me again. I've just unmuted myself and put the camera back on. Just to let you know, Nicole's had the quick question there that yes, all the participants are muted, so should only be able to hear from myself and Shannon. So kids in the background, that won't bother us. We won't hear them, so don't stress. So just to introduce myself, my name's Paul Cunningham. I'm an associate here at Smart Business Solutions. I'll be your moderator today. So I'll be introducing Shannon, who will be speaking to you shortly, and I will also be monitoring the Q&A questions throughout the webinar and at the end. So please submit your questions through, and we will monitor as we go. We'll most likely do question and answers just at the end, but if there's anything that's I think really important, I will interrupt if need be, but most likely we'll just do all of them at the end. I may even message people privately if it's a quick answer off the top of my head. And as you'll see on the screen, just for people who may not be familiar with Zoom, we have you should be able to see the slides and the vision of Shannon and myself. Also down the bottom, when you run your mouse over, you'll be able to see the chat screen and the Q&A. So I can see people are already familiar with the chat and using the chat. If you've got any questions throughout, can you please put them on the question and answers? That makes it easier for us to monitor them all. And yes, this will be recorded for us to watch later as well, so you can rewatch as many times as you like. Yeah, so if you just chuck the questions on the chat, on the Q&A, sorry, not the chat. Today's presenter is Shannon Smit, who's the founder and managing director of Smart Business Solutions. Shannon has been advising small and large businesses for over 25 years, and prior to founding Smart Business Solutions 13 years ago, worked for one of the world's leading accounting firms in Melbourne, Prague, Amsterdam, and New York. Shannon is a long-term local, having grown up on the peninsula and returned from overseas to apply all of the large company practices to help small business. Shannon is extremely passionate about helping small business and our Mornington Peninsula community. Shannon is a founding board member of the Committee for Mornington Peninsula and has been recognised as one of Australia's leading tax experts, being appointed to the Australian Government's Board of Tax Advisory Panel. You can thank Shannon for many of the small business tax incentives, including the instant asset write-off, the simple BAS, and increased small business turnover threshold, to name a few, as part of that appointment. With all the changes we've seen in these 2 weeks, Shannon is well positioned to share the latest developments with you, and that was a mouthful. So I'll hand it over to Shannon now, and she can get started. Thank you.
Great. Thanks very much. And as Paul mentioned, he'll be moderating today. So any questions as you go through, shoot those through, and we'll try and get through to those at the end. Thanks everyone for joining today. We've had a great turnout in just less than, 48 hours notice, but we've seen a lot of activity, a lot of calls coming from clients, and we felt it was important to put something together and get communicating out to you all, so that if you do then have follow-up questions in relation to your specific situation, we can chat through. But just to give you a bit of an overview, we do have quite a number of you who haven't been involved, I guess, as clients with Smart Business Solutions. So a bit about our background. We're accountants and business advisors based in Mornington. Whilst we obviously do annual compliance and tax returns, one thing that we're really passionate about and pride ourselves on is our client service, but also helping clients from a business advisory perspective and through times like this type of situation. Like the Prime Minister warned us all, there was going to be no quick solutions for what's going on, and that as a business we should be preparing for 6 months of disruption. I guess the theme that we're trying to communicate with our clients, apply ourselves and really have in the back of your mind is, like the airline masks, it's really important in these times for small business owners to really put your mask on first, so that you're going to be in a position to be able to help others. As a business owner, you really need to focus on your business and ensure that you can weather this storm, and so that you're there for the long term, and ultimately you can continue to trade, employ others, supply to others, and ultimately serve to others, especially in our community that we've seen such a major hit to our economy on the Mornington Peninsula in the last 2 weeks alone, especially in our hospitality. So I really feel for those clients in that area. A lot's changed, I guess, for all of us in the last 2 weeks. We've gone down into remote remote. So you can see the team. This is Monday morning's meeting, our team meeting. Everyone picked up their screens on the weekend, their computers and phones. We're all working remotely at the moment, but it is amazing with cloud technology that we're in such a great position to be able to do that and to keep going. I guess keep going through this trying time. I think that there's a lot going on for clients in this situation. So today, what I want to go through, and many of you would have received our email earlier in the week. Now, we tried to condense it as much as possible to a summary in that email with links, but it was a real challenge. A lot has happened in the past week or so. So what I want to go through today is the economic stimulus package, the bank assistance that's available, the Victorian Economic Survival Package, they're calling it, that's the state government package, why your March BAS and tax planning may be important, some of the ATO administrative concessions, they've really come to the party in these trying times, and then also what to look for next. And it is going to be a moving target. So if I start off, and the focus today is really on businesses, all of you that are joining the call are really pretty much business owners. So we start off by the tax-free payments of up to $100,000 for those that employ people. So in each of these stimulus package items, I'm going to go through what is it, what do I get, and how do I get it? Because I think that's the main points or questions that I'm hearing from clients. So what is it? Small and medium-sized business entities. So with turnover up to 50 million, don't know about you, but I think 50 million is quite a big business. But anyway, they're saying it's small and medium. Up to 50 million are eligible to receive a total payment, which is going to be in the form of a credit on your tax account with the ATO of up to $100,000 and a minimum payment of $20,000 based on your PAYG withholding obligations. So that's based on your employee PAYG withholding. So what do you get? Eligible employers that are withholding tax on their employees' salary and wages will get a payment equal to 100%. Now, a week ago or a week and a half ago, that was 50%. They have now increased that to 100%, up to a maximum of $50,000. I'll go through some examples after them in a few slides. If you have salary and wages that you pay to employees, but you actually don't withhold any tax, maybe they're casual and there's no tax requirement, you will get a minimum payment of $10,000. And this will be delivered as an automatic credit into your activity statement from in April going forward. So it'll only come back as cash if it's a refund, you're in a refund situation. So how do you get it? Make sure you're lodging your March BAS and also your ongoing IASs. It'll be a credit onto your ATO account. Just some of the fine print is it is for businesses with turnovers of less than 50 million, but you also must be an active eligible employer. So those that are already actively employing people now, you will be considered that. They've got it from businesses established prior to 12th of March 2020. Now the reason for that, and I've put that in the fine print down the bottom, the reason for that is they want, they've put in place in the legislation a specific integrity rule to basically stamp out or prevent situations where people create wages just so that they can access these benefits and get a higher amount of this cash boost coming back to them. So that's been very strongly put out there by the legislation and the tax office on this. This may change, and you'll be getting this hot off the press. I've been in discussions with Treasury all this week. They're actually meeting physically, or not physically, actually via Zoom, as we're talking now. And the Treasurer, Josh, is involved in this as well now, because there is there are some taxpayers that have slipped through the cracks in this situation. So I'll go through a bit more of that in soon, and there will be potentially changes coming through from the government on that side. So when do I get it? As a summary, if you are a quarterly lodger, you're going to be getting the lodgement due date is the 28th of April, but you will be getting it then from you'll be actually getting the payment or credit onto your account once you've lodged your BAS that's come through. On the monthly, again, so you've got your same dates that you're probably used to now when you are lodging your BASs and your IASs. We will put, the video will be available after this session, the webinar, and we can also make the slides available should you need those as well. But if I give you a bit of an example as to what it's going to mean, and a week and a half ago, again, a lot changes in that time. There was talk that you would get 50% of what you paid from your January, February and March IAS for those that pay PAYG withholding for your employees on a monthly basis. What's come through is that's actually going to be what you've paid in March, and it will be then times 3. So you'll be actually getting your March, and that will be grossed up to go and assume that January and February are of the same level. Now, I see with some of our hospitality clients, that is going to be problematic because January is usually a big month and there's a lot more PAYG withholding. But if I use this example here, we have 5,000. If you have 5,000 in PAYG withholding in your March, I say IAS, but it's the PAYG withholding of your March BAS, you will get a credit, and the credit will come through from the 21st of April, despite the lodgement's not due till the 28th. If you lodge in early, you'll get it on the 21st. You'll get 15,000 credit. So that's reimbursing you also for January and February, and it's making an assumption that it is all the same. You'll have your IAS in April, May and June, and you'll get 5,000 each month for that, coming to a total of 30,000. So of the available 50,000, in this instance, you'll be getting 30,000. Once you've got those months have been lodged through, what the tax office will be doing is saying you were eligible for 30,000. We're now going to give you a further 30,000 over 4 monthly installments. So in July, you will be getting two credits added to your account, but that will be equal over 4 monthly installments. What happens when you've got your monthly over the maximum? So you've got quite a number of employees. Let's just say your March PAYG withholding is $12,000. You will get a credit of $36,000 on the 21st of April, provided you've lodged before then. And then you'll have your April IAS, May, and then June. You've lodged 12,000 each month for those. You will get 12,000 on the 21st of May, and you'll get only 2,000 on the 21st of June because you've already come up to your 50,000 eligibility. Then you will then get 4 monthly installments of 12,500 spread over the next 4 months, bringing you up to 100,000. So it's really the goal of this cash boost is really to help keep employment and keep staff employed and give businesses that cash, because it is tax that you have withheld from your employees. You were required to pay it. Now, you may get this refunded to you, but that will depend on your overall tax position that you have on your portal. In a situation where you have a quarterly under the maximum, generally you won't have a quarterly payer who's over that maximum because they would have been put onto monthly withholding. So a quarterly payer under the maximum, let's just say you pay 15,000 a quarter in your BAS, so you lodge your March BAS, you'll get 15,000, and then you lodge your June BAS, you'll get another 15,000, and there's your 30,000. This will then be spread over 2 payments, similar to the other ones, only over the two payments. If you have a situation where you have no PAYG withholding, so you have wages but no tax withheld from your employees because they're all on lower income earners, casual staff, and no tax paid, you will get the $10,000, and that will get paid in on the 28th of April as a credit, and then you'll get 2 lots of 5,000 over the following period. So one of the next in stimulus packages out there was on supporting apprentices and trainees. So employers with less than 20 full-time employees who retain an apprentice or a trainee who was in training with the employer as at 1st of March may be entitled to this government-funded wage subsidy. So what do? You get 50% of the apprentices or trainees' wage paid during the 9 months from 1st of January to 30th of September, and you have up to $21,000 per eligible apprentice or trainee. So employers can register for the subsidy from early April, and the final claim forms must be lodged by 31 December 2020. One would assume most people will be getting that in pretty quickly so that you can get that funding. Either contact if you've got an organisation you work with apprentices, with your apprentices, or contact the Australian Apprenticeship Support Network. They'll be able to point you in the right direction as to how you can get that access to that benefit. The next one is the increase the instant write-off for threshold for assets. So we actually have had the depreciating asset write-off at 100% for an asset up to $30,000. This has been increased up to $150,000 through till June 2020, and it includes both new and second-hand assets that you've first used or installed ready for use, purchased from 12th of March, which was the date that they actually announced it, through to 30th of June 2020. So what do you get? You get 100% write-off of that asset up to $150,000. But I do need to remind you that there is a depreciation cap when it comes to motor vehicles. So just because you get 100% write-off, motor vehicles have always had a cap on what we're allowed to depreciate. So you buy a $100,000 motor vehicle, you can only claim depreciation up to $57,581. So even if you buy a $60,000 motor vehicle, you're only going to miss out on a few $1,000s, which you would never have got had this cap not have been changed anyway. Now, I know that there's a lot of people that are saying, well, I'm probably not about to go out and buy a heap of equipment given what's happening at the moment. If you do need that new car, you were planning on getting that new car before a lot of this happened, or that new piece of equipment, there can be a cash flow benefit on it, because we are all focusing, we're not going to be in this forever. We want to get our businesses through this trying time, but we all hope and want to get out the other side as well. There is a situation where if you purchase the asset and you can claim it as 100% tax deduction before June 30, but if you finance that asset, and you might finance it over, say, 5 years, if you've had actually good profits already this financial year and you can claim 100% of this asset that you've purchased, then you're going to reduce your tax bill for this year, your income tax bill, and you're also not going to be paying for it for, say, a period over 5 years. So you might finance the asset over 5 years. So you will actually get an additional cash benefit up front rather than waiting over the 5 years. So that's something to think about. Again, don't go buying assets just for the sake of buying an asset. If you are going to need it, also speak to your accountant, make sure that the asset is eligible to be considered under this as well. The other one is the accelerated depreciation for new assets. This one is if the asset doesn't qualify for the instant asset write-off, so basically it's more than 150,000. Now I know there's probably not too many of us that are going to go out and spend more than 150,000 on a piece of equipment at the moment. But if you do have that situation, then you will actually get accelerated depreciation of 57.5% in year one instead of 15%, which is normally what happens. So it is a bigger tax deduction in this year. And again, if you finance the asset, that might actually give you a positive cash flow in this situation. Another one that's come up is the early access to superannuation. I'd probably say I'm not the biggest fan of this suggestion, and there's been a lot of talk about this one. There is some fine print around this, and again, anything that I discuss now in relation to super is obviously general advice, and you need to see how it is with your specific situations. There always has been a hardship grounds with your superannuation in being able to access it. But what they've actually done, they've kind of expanded because of the economic effects of the coronavirus. They have actually entitled more to be eligible to be able to claim hardship with your superannuation fund. So either you've been made redundant, your working hours have been reduced by at least 20%, or a sole trader, their business has been suspended, or a reduction. So what can you get? You can get up to $10,000 before June 30 or July 1, and a further $10,000 after July 1. From your super. So it is from your super balance. It is eroding your super balance that you will hope to retire on in future years. So how do you get the early access to your superannuation? So eligible employees, if you're looking to access your super, as I mentioned earlier, there is hardship and has always been hardship, but now they have actually reduced that. Go onto your MyGov website. You need to certify that you satisfy all the relevant criteria, which I mentioned in my prior slide. So go through your MyGov. This is for your retail super funds, so your AMP super and all of those, Australian super, etc. Do the rules differ if you have an SMSF? Well, you still have to apply to your trustee. Now, no doubt there will be forms that we can provide you with from an SMSF perspective so that you can ensure that you've got the required documentation. But again, you'll need to certify that you do satisfy that eligibility criteria. So that's going to be important. And often those that maybe have had the SMSF, you may have the business operations going on. There are going to be more rules coming out in relation to the SMSF and related party rentals, so stay tuned on that. What are the tax implications? All amounts withdrawn from your super fund, so it'll be up to the 10,000 till June 30, and post June 30 will be another 10,000. They are all tax-free, but there's the one problem I have with this initiative, and I understand that if this really helps getting that 10,000 before June 30 to keep you going and keep the wheels in motion. The challenge with this is two things. One, you are actually eroding a super fund balance that you're hoping to retire on at a later point in time. And secondly, now is not the greatest time to be pulling money out of your super, from the perspective that a lot of super funds have actually, because of the markets, they've dropped 20 to 25%. Now, when you pull that out, you're realizing that loss. You've actually then officially have lost it, so to speak. Whereas whether you can ride out that storm. So obviously it depends on your personal circumstances as to what you want to do, but it is something that's definitely worth considering before you jump down that path of doing that. Other small businesses, so I'm talking about here those without lots of employees. What about sole traders, companies and trust businesses where the business owner doesn't pay yourself a wage? So there's a lot of clients I know that have a company, they operate in a company or they operate in trust, a family trust. They take money throughout the year as they do from the business, and that's what they're living on. They put it to their director's loan or beneficiary loan, and we get to the end of the year and us as accountants distribute money to their individual tax returns, whether it be as a distribution or as a dividend, and we put that through to them. Technically speaking, as the laws are now, they don't qualify for this cash boost, which is what's been given if you employed someone. We also have the integrity measure where they've made it pretty clear that if we restructure or recreate a transaction, there will be penalties on that if it's seen as trying to access this benefit. That's absolutely crazy, because at the end of the day, the whole reason for this cash boost, there were two reasons for it. One was to keep people employed, and the second one was to help small business. And helping small business does include business owners that haven't paid themselves a wage. So I started to get a bit on the email on Sunday night, as you do, and I contacted the people that I knew at Treasury and asked if, and so as Paul mentioned, I'm on the Board of Tax Advisory Panel. So I'm not one of the Board of Tax, which is 8 people, but I'm on the advisory panel and linking to them. So I was emailing them in regards to this, because there's a lot of clients that fall through the cracks. And I guess when we heard about these opportunities, our thought process was to restructure some of these clients, and because they are taking a pattern of money from the business throughout the year, we are declaring it in their individual tax returns come end of year, and have so for the last few prior years. And so what I intended was to reclassify those payments that clients have been taking into wages. When the legislation was passed through and came out early this week, there is this integrity measure that basically says you cannot do this, or that will be seen as a scheme, and you'll be charged accordingly with that. So I have been on the email this week and phone calls. Even last night, I was talking with the board, some of the board and Treasury, and they're really pushing this through. This has been escalated up to the Treasurer, so Josh is aware of this issue, and they actually have a meeting today to go through and work out what that situation is going to be. I've put forward 3 suggestions to them. Doesn't mean they're going to listen, but I thought it was worth giving them my 2 cents. One was just giving small businesses 10,000, same as the no PAYG withholding, so the same. Second one was allowing us to reclassify where we could show that there was a historical record over the year and also in the prior year tax returns of money being paid through as dividends or distributions. And then thirdly, the same as the second option, but capped at what they've lodged on the return. So I will keep you updated as I hear more. I am going to be getting a phone call later today following the meeting to hear how that's progressing. So I will keep you updated when I hear more of that. From a sole trader's perspective, there is a challenge on that side as well, because they're ultimately, a sole trader cannot pay themselves a wage. You actually can't. You're a sole trader, so you actually can't do that. They are eligible to the instant asset write-off, accelerated depreciation. There is the increase in accelerated income support, which is basically the $550 from Centrelink on a fortnightly basis. And then the SME Guarantee Scheme, which I'll go through in a second, and early access to super. So there were a few that I guess fell through those gaps when they were going through this legislation, but you know, I do have to commend the fact that we never see legislation get through so quickly, let me tell you. So the fact that they were able to pull this off in a week and a half, and also just seeing the traffic and activity that they've been doing this week to try and take some of these issues on board that we've been raising that have come out since has been really impressive. So hopefully they progress a bit further on that one. Other stimulus package measures on an individual level. So again, it's that coronavirus supplement. So this is applicable then for the sole traders. They're expanding the access and eligibility to certain income support payments, so those that are already on some of the payments, and then tax-free payments of $750 to eligible recipients. Again, early access to super. The other one, which they may be some business owners who are no longer running a business and they've retired. One thing they have done is reduce the minimum pension drawdown for those that are taking pensions from their super fund. So normally what happens is that when you're in pension phase, you are required to take a minimum level of pension out of your super fund every single year when the fund is in pension phase. They have halved the minimum amount that's required to be taken. Reason for that is super funds have taken a crash, obviously in the last few weeks. And on top of that, sometimes there are instances where those that are retired don't need those full amounts and would rather leave it in the super fund and not have to be forced to take that out. The government also want more money in the super system, as that'll support with a lot of the other initiatives that they're looking at. So that's some of those changes. On the bank assistance, so what is the bank assistance that they're providing? The government's announced an SME Guarantee Scheme. So the government will guarantee 50% of new loans to SMEs. So this is going to give you, I guess, what we would call your working capital, some cash, so especially for those businesses that have been forced to shut their door and all of a sudden they still do have expenses going out and no income coming in. The loans are new short-term unsecured loans, so you don't need to have any assets to put up for these. And you can actually borrow. So what can you get? $250,000 per borrower. The loans will be up to 3 years with an initial 6-month repayment holiday. So that's going to give you that working capital to help you get through that time. How do you get it? Contact your existing bank. They're all fully aware of what's going on, obviously, with it. They'll know why you're calling. I know when people were calling a few days ago, they didn't have everything in place at that point, but I do believe they have now, and they can help get that process through. You can see the link on our website. We've just been updating that as to when the banks have been coming on board with their different initiatives that they've been able to provide. So looking at it on a state level, payroll tax, for those that employ a lot of people, this has been a really great outcome for them to be able to help keep those people employed. So businesses with an annual taxable wage of under 3 million will have their payroll tax for the financial year so far, so since 1st of July through to now, they will have that refunded, and then there'll be no requirement to pay any payroll tax until after June 30. You still do need to lodge your payroll tax forms each month, but you do not need to pay. How do you get the refund? We did put a post up, it's probably on a blog on our websites, on our social media, on how you can physically go in, but do contact us if you have any questions. As soon as I found out how to do it the other night, I was on the phone to a few clients. We walked them through and they've put in their applications. Payments are supposed to start coming through today onwards, and they're going to try and process those as quickly as possible. Payroll tax, I really don't like payroll tax. I think it's the worst tax out there, that you tax a business for hiring more people. So maybe with the waiving, maybe they can, come up with something else to get rid of payroll tax, but I'm not a fan. The other areas on a state government basis, deferral of the 2020 land tax payments. If you've already paid, you can actually get a refund for it, and they'll give you additional time to pay until March next year. And you can apply for a refund through the SRO website. Applying for a refund for the payroll tax through the SRO website for the payroll tax section was actually really quite straightforward. So hopefully on the land tax as well. Those that are in the hospitality, liquor license fees, your 2020 fee is going to be waived, and if you've already paid it, you're going to get a refund. Go through, you should have something from where you've paid it, or where on the website of where you've logged in on doing it. Otherwise, contact the Victorian Commission of Gaming and Liquor Registration Regulation, and they'll get that refund to you. So why might your March BAS be more important? I guess as part of putting on your own mask strategy, looking at your tax planning, looking at the incentives. If you do pay yourself a wage already, then there's opportunities from that perspective on a tax planning basis. If we often see clients that we pay a wage during the year and then we'll do a director's bonus at the end of the year, we may bring forward some of those. There will be more coming, as I said earlier. If I get any update later today, and if I hear of any changes coming through, I will let you know, because it is important, or it will be critical if we are able to recharacterise those that get distributions and dividends and change those to be called wages. So as soon as I hear anything on that front, I will be putting that out. If you haven't already liked like our Facebook or something, go onto that. We don't like to spam everyone with lots of emails. We try and keep it to a minimum, but we do put everything up on socials. Although there's probably been more emails recently, obviously, with everything going on. The other critical aspect is you've really got to manage your business. So going back to put your mask on, manage your business, understand your cash flow, and even start looking at your cash flow, whether it be each week. Those of you are on that are on Xero or even MyOb or whatever online software you're on, be constantly keeping yourself up, reconciled, and having a look at where you're going from a financial perspective, so that you really can proactively manage the situation that you're facing at the moment. The ATO concessions, I have to say, we always love to say negative things about the ATO, don't we? But I'd have to say they have been absolutely so sympathetic in all the dealings we've had with them over the last 2 weeks. Nothing really has been a problem. Some of the what they've been able to do, it's not that they're letting you not have to pay those tax. That's what we're getting from the federal government. So the ATO's role, for those that are not that clear on it, the government and Treasury are the ones that basically set the rules, so to speak, and the ATO just administer the rules that are actually set by the government. So the ATO doesn't have the ability to, give you those extra taxes or savings or payments back. What they can do is they're deferring payments for your activity statements, income tax assessments, fringe benefits tax, for up to 4 months, and they're just going to defer that. But you do need to contact them, so feel free to contact us. We can help you with that as well. Those who report quarterly, so like we were talking before when I talked about the PAYG withholding on a quarterly basis, if you would prefer, you can move to monthly reporting to access the GST refund or credits off your account earlier if you want to. You can vary down your PAYG income tax instalments to 0 for the March quarter. You can even claim refunds. So if you're someone that does get those dividends or distributions, and you're paying PAYG with income tax withholding, so you're prepaying your income tax, we can actually apply to the tax office to get your September amount paid back. your December amount paid back, and 0 for March and potentially June going forward. Now, ultimately, once you do your tax return, you are going to have to pay those taxes. But most people, their tax return isn't due until March or May of next year. And let's hope that we're all through this in less than the next 6 months. So it's just going to give you that cash flow now when you're going to really need it more than any other time. They have been fantastic at remitting interest and penalties, anything after 23rd of January. So they've just taken those straight off. Usually, many of you would have found once you pay off a debt, they usually let you out of it anyway. But what they're doing is, in this case, they're actually remitting those, any that were incurred after, they're actually remitting those now, as opposed to waiting till after you've paid the debt off in full. They are allowing you to enter into a low interest payment plan for your existing and ongoing tax liability. So there's a lot of flexibility to help from a cash flow. Now, the ATO did make a point, and this is because from a legislative perspective, they don't have any control over this, but you do need to keep paying your superannuation guarantee obligations for your employees. They just administer, but they cannot give you any relief on that front as well. So my point would be to make sure you keep your superannuation guarantee, use some of maybe if you do get refunds on these credits for that, and then you can always negotiate something with the tax office. But I have to say this, the team, the staff there have been incredible, and I'm sure they've been inundated over the last 2 weeks. If you have a certain particular situation, they'll also look at providing assistance where possible. You know, nothing's been too much of a challenge for them at this point. So what can we do to help you? We are offering clients, if you want to, or new clients, or just if you want to have a chat, complimentary business continuity type plan. If you want to just bounce and have that person have a bit of a chat about what you've got going on in your business. We've been chatting with a lot of our clients over the last 2 weeks, and just to bounce some ideas and help you get through this time. I'm happy to chat. We're doing everything obviously on Zoom at the moment, proactive accounting meeting. If you need a business planning or a cash flow forecasting, maybe some coaching, also happy to chat to you a bit about how we might be able to help you in those areas as well. We have some upcoming webinar sessions, so I'll keep this secret amongst my, we did actually fill up today, so we had 100 registered for today. So don't tell anyone, but this is my first ever webinar, so I hope it worked okay. We've been talking about for a long time our lunch and learns that we do each month. We've been talking about doing those as webinars as well. And that's nothing like the present when you get forced into these situations to do webinars. I guess I'm always a bit of a face-to-face kind of person, and we do have great networking at our lunch and learns. What we have decided to do, rather than just a monthly lunch and learn, we're going to actually change that to weekly at the moment. We've got a lot of great topics that we presented last year that are going to be super relevant now for businesses to help you get through this timing. Next Friday, we're going to talk about your business continuity planning. What do we mean? We'll give you a framework, more like basically a template for you to have a look at your business and how you can get your business through this time and think of these various different areas. Thursday the 9th, because Friday's a public holiday, we're going to do cash flow planning in difficult times. Some of you may have came to our lunch and learn workshop a few weeks ago, where we actually Daniel and Paul presented this. We're going to repeat basically that presentation. It's even more important now. There are more to come. If you've got any topics you'd love to hear us speak about, do let us know. And the big key message is do nothing should not be an option. If you need help, yell out. If you want to bounce some things off it, office, or if there's a topic, we will also have a HR specialist who's going to be joining us as well in one of our weekly lunch and learns that we'll do over the webinars at the moment. Go to our events page. We'll try and keep things updated on that as well. Another one, just to save the date, those of you who have been to the Byte Business Conference the last few years, it was supposed to be on the 14th of May. We have postponed that to the 28th of October. I'm hopeful we're all through it, and we really, I guess the tagline "Adapt and Thrive" couldn't be more important than what we're going through now, and the next 6 months of really learning to adapt and thrive. So I'm hoping by October we're all allowed to gather in big groups, and we can have our event and really get our businesses going again with some great speakers to hopefully inspire us and keep us going. So I'll put it over to Paul to go through maybe some of the questions that we've got that have come through.
Hi Shannon, great job. Thanks for that. We have got a few questions, and if anyone's still got any more questions, please chuck them in the Q&A and we'll try to do our best to get to them all. Just to start off, just would like to clarify regarding the $10,000 early release for superannuation funds, that is actually tax-free to the individual. So I know there was a couple of people who had that question there. So it is tax-free to the individual, and it won't, according to the government, what we've seen, the amount withdrawn will not affect any Centrelink or Veteran Affairs payments as well. So that is tax-free. Just wanted to clarify that question.
Mm-hmm.
And so one of the questions, the first one here is interest-free loans for small business. I'm assuming that's referring to through the bank, the 6 months interest-free. So what I've heard, Shannon, I guess you can add if is that they're still rolling that out, the banks, and that more information will come sort of in the next week or so.
Yeah, some of them have said that. I've heard some clients have spoken to their bank and the interest will then be basically accrued and added onto the loan at the end. So it's kind of an unsecured, so I'm not sure about it being 100% interest free.
Yep. A question from Claire. Entities who lodge their POIG monthly, but they may not have lodged or paid anything for January or February, if they lodge their March statements, do they still get a credit? I guess that would just depend on, I guess based on the integrity rules, that should be fine as long as there's a reason for it, I guess.
Yeah.
Yep. For a question from Kim, if a business has to let employers go, does the business still have to pay out a redundancy payment?
Yeah, I believe the business does. That probably comes from an employment law perspective, but I believe they do, depending on your contract. So I've seen with some, obviously people have had to let go clients over the last, let go staff over the last week or so. Depending on what your employment contract states, whether it's a week, 2 weeks, etc. I know, speaking with one client, they were going to use some of the funds that were coming through to help pay out also leave. I put them on leave for that period of time, but yeah, you do still need to do the redundancy based on what your employment contract is. But it is probably more of an employment question, so we can save that actually for our employment person when they come on too.
Yes. So a question from Judy, a new business that has started in this financial year, if there's no prior tax return but a pattern of funds being drawn out of the business since December, so do they still have access to the POIG?
If they, at this stage, the way the rules are now, they don't have access. No one who hasn't put them on as a wage has access. That exact situation that you've described is one of the situations where you'd want to hope that, I would say, common sense prevails, and that that there would be a situation where they've set up the business. There was a commercial intent to draw a wage, but the wage wasn't drawn at this point as the business was in this startup. So that is definitely the area that we want to get some clarity, so that creating a wage now is not going to be a problem for the, for the accountant or bookkeeper who's processing that through.
Yeah. And a question from Christy: Can you apply for land tax refund for a property in an SMSF?
I believe, I haven't seen anything to contrary. It's actually for all, well, it's for land tax. So that's a good question. I might have to look up further on that, but I believe it is.
I guess it's only for 2020 though, so you couldn't go back to prior year, I guess.
Yes, yeah.
And another question, have we heard anything regarding commercial rental assistance from the government? I think they were meeting this morning to talk about what they...
Yes, that's right. Yeah, so they are meeting this morning on it. So we do expect to hear something coming out, I guess coming out on the government on that. Also related to, there would be a lot of people that have also got an SMSF and they have their business property in the SMSF and they're the tenant, and can they give themselves rent relief, being that it's not, being that they're related party. In chatting with the ATO last week and pushing them on this issue, they had hoped to come out Monday, Tuesday this week with a statement, because we went back to our auditors, the super fund auditors, who said there's no way that they'd sign off on that unless the ATO brought something out, so hence the pressure we put on the ATO. The ATO has confirmed this morning, via a call this morning, they said that they would be releasing something today. So I expect that as long as it's on commercial terms, the tenants of their own SMSF property will be able to give themselves some rent relief, but it needs to be on commercial terms. When it comes to commercial terms, there's going to be no right or wrong answer with that. What I've seen from a commercial perspective with a lot of clients that actually are renting from third parties, they've seen 3 months rent free, 12 months rent reduced by 35%, 6 months at 50% of the rent. So it's really varied between different, I guess, different landlords.
So just a couple of questions left. So if you do have a question, if you can chuck it in the Q&A now so that we can make sure we get your questions answered. Yep. So, pardon me. Can you clarify that if you get your PAYG tax back for March 2020 and June 2020 quarter, do you still have to pay it back when you do your income tax return for the 20 financial year? So you won't have to do that.
Yeah, oh no, when you lodge a return overall. You mean, so you mean PAYG, I'm assuming Sharon means PAYG for income tax? Is it income tax? So if it's for your income tax return, oh yeah, she said yes, thank you, okay. Yeah, so you will get the money back now, but when you go to lodge your 2020 tax return, you might lodge that in May next year. Normally it might say you've got a tax bill of $30,000 and normally you would have paid $30,000 over the quarters throughout the financial year. So you get to the end of the year and you've got no tax payable because you weren't the same income. You will get that as a refund now, but yes, you will have to pay it back. You will have to pay whatever tax is on your income tax return. You'll have no credit for tax prepaid because it was refunded to you. But on your PAYG withholding for employees, that's tax-free income.
Yeah, so you won't have to pay back for the PAYG that you withhold for the employees, yes, but you pay PAYG for the company or for your own individual. You will have to pay eventually when you lodge tax. Yeah. Okay, and Asbar. Land tax deferral is for vacant commercial land only, and not vacant residential land? I think it's all land tax, I thought.
I think it's all land tax. That's a good question. I'd have to check that. I thought it was, I actually didn't look at it as being commercial versus that, so I can check. Yeah.
I've just got a couple of questions in the chat as well.
Yep.
If I pay myself a wage, could I pay myself a small bonus or some amount so I can claim back the PAYG?
Yeah, so that's what we've been, that was our thought on it. And that's what a lot of accountants were actually thinking. I'm on a few groups where accountants are having lots of chatting this week. That is one thing that's good about our industry, I have to say. Everyone has been helping each other. Accountants have been helping each other. So, and that's where, if my justification on that, I would be comfortable with that, where I can show that there's been a pattern that that's something that we've normally done. So it's not, we're not just doing it as a one-off. You've never done it. You've always paid yourself a wage of, 40,000, and now we want to claim a wage of, 80,000, and there's no history. So where I've got clients that I can show that there's definitely been a pattern throughout the year to do that. We probably would have done it come 30th of June anyway, because we would have looked at their, say, director's loan, or even looking at the profits and distributions that had to be made out of the trust. And if that's similar, then that part I would be more comfortable with. But these integrity rules are quite, I guess, stringent at this point. They're in the fin review yesterday. And this, hopefully, as a result of today, we get some more, I guess, clarity on that, because I think that the intent of the law and then the way in which it has been drafted kind of contradicts not to the spirit of what they're hoping to achieve.
Do we need to apply for the payroll tax refund, or does that happen?
Yes, you do need to apply, and I would get on and apply for it ASAP. Just go onto the normal, where you lodge your payroll tax, where you normally lodge your payroll tax forms. Go in there, and I think it's on the left-hand side. I put a post up on our Facebook with the instructions. I think it's on the left-hand side. You request a refund, and you just go through the details. You'll need to know how much you've paid in payroll tax for the year, so maybe look that up before you do that. Make sure your bank account details are in there, because most likely you're not normally getting a refund from them. But you can request that now, and I believe the payments are starting from today.
Awesome. And it looks like the last final question: the money we receive from the government tax-free and is tax-free and doesn't need to be included as income?
That is correct. Yes, that PAYG. Interesting point on that. So watch this space. Interesting point on that is that, yes, it's tax-free, but then how do you get the money out of the company or the trust as far as normally we distribute ultimately, or we do dividends? And that's a question we've also put to Treasury to see if there's some mechanism, and that's probably more of an accounting speak, because that's probably something that we do, and none of our clients notice that we have to do that when we're going through it. But yeah, it is tax-free, and the PAYG employee withholding, no requirement to repay that. But as one of the questions earlier, if you do get a refund on your income tax amounts, then it just will still be payable once you lodge your tax return. But again, if you've still got challenges at that point, you can always put in for a payment plan at that time.
Excellent. I think we've gone through all the questions. So
right. Okay. So yeah. So if you've got any questions, just to introduce the others in the leadership team at Smart, myself. Obviously, we've got Paul, who's been speaking. We've got Daniel as well. Daniel and Paul both have got, over 10, 12 years experience, chartered accountants as well. So if you need any help, feel free to reach out to any of us, and we'll be able to assist you as well. Anyway, thank you everyone for joining. I hope you got a lot out of today. We will put the recording up for those that want to rewatch it. And everything is current as at today. This could all change tomorrow. We might need to do updates as we come along, but it's been a moving target even in the last 24 hours when I started putting this together. So thanks very much. And I hope you're all keeping safe and self-isolating at home. Thank you.
thank you.